Good morning. Good morning, everybody. Welcome to today's Workshop Wednesday webinar, Discover Your Path to Home Ownership. My name is Jacob Wilson. I'll be facilitating today's discussion. I'm a business support manager here at First National Bank Alaska. Today, we're going to walk through the financial side of the home buying process. We'll start by discussing the early planning phase, then move into the application and purchasing process before finishing with some post-purchase follow-up. Joining us today are two of First National's mortgage lending experts, Sarah Stansberry and Summer Rose. Good morning, Sarah. Can you hear me okay?
Good morning, Jacob. Yes, I can. I can hear you.
Great. And Summer, are we coming through loud and clear?
Sounds wonderful, Jacob.
Awesome. Sarah, Summer, and I have had a great time preparing for this webinar. I've certainly learned a lot, which is great for me personally, because I'm actually considering moving and purchasing a home in the near future. The information we'll cover today has helped me, and I hope it helps you as well. Before we get started, I'd like to have Sarah and Summer give some brief introductions. So, Sarah, can you start us off?
Absolutely. So I started my mortgage career in early 2016. I was having fun, helping people. And I was like, wow, I get to do this, help people financially, find solutions to make their home ownership goals a reality. And that really brought significance to my life. Also, in the past 7 years, I have acquired 2 dogs that keep me busy, an investment property, and a whole lot of knowledge to help people in their unique situation to purchase a home.
Thank you very much, Sarah. Appreciate that. Summer, would you mind jumping in and introducing yourself to everybody?
Sure. Good morning, everyone. My name is Summer Rose. This is my 7th year with First National Bank Alaska. I've been in the mortgage industry now for over 20 years here in the state of Alaska. A little bit about myself. I was raised in a military family. Both of my parents were active duty Air Force for most of my childhood. I've got a teenage son, and I care for my disabled veteran mother. I live and work here in Chugiak, Eagle River area, but do loans all across the state. I've been blessed over the years to help many families with their home buying goals. I'm very passionate about what I do, and I enjoy helping people realize their dream of homeownership.
Thank you, Summer. So I'd like to take a moment to let the audience know that we will be accepting questions during this webinar. At the bottom of your screen, there's a question and answer feature within Zoom, and I encourage you to use that. What we'll do is we'll compile all of those questions during the webinar, and we'll answer those at the end. If we don't get to your question, don't worry about it. We're going to follow up with you afterwards. So with that, we're going to jump right in, asking Summer the first question. So just to get this out of the way, I'm ready to buy a home, but the interest rates and the housing prices seem high right now. Should I buy now or should I wait? Thanks, Summer.
Great question, Jacob. Everyone's situation will sit down and meet with you and get you on a path that fits your needs. We will prepare you for the home buying process specific to you. As far as interest rates go, historically speaking, if you ask me, interest rates are still pretty good. The 30-year national average for mortgage interest rates in the U.S. from 1971 to 2023 is actually 7.74%. At one point, families saw interest rates as high as 18% back in October of 1981. And shortly, a few years after that, rates were advertised at all-time lows at 10%, and people were still buying homes. When I bought my first home in 2004, my interest rate was a 6.625, and when rates came down in 2021, I refinanced. So what I'm saying is, when it comes down to it, homeownership is much more than just an interest rate.
Thank you, Summer. Sarah, what steps should I take now when preparing to buy a home in the next 6 months to a year or so?
Well, Jack, yeah, definitely don't wait. It's free to pre-qualify. You can come or contact Summer and I, and you can get an application going. Before that, I would say prepare your financial information. Keep in contact with us, alert us if anything financial changes or new credit, new job, selling anything. You would want to get those documents ready, like your tax returns, pay stubs, W-2s. Also, when we do an application, we do pull credit, but you can also look at your credit previously. Everyone gets that one free credit report. If you go to annualcreditreport.com, you can see a printout and you can review it, take a look, see if there's any errors or discrepancies that can negatively impact your overall report, such as maybe collections. And so you're aware right before you purchase a house, and then you can fix those errors if need be.
Okay, that makes sense. And so when and how do I submit the application process, and what does that process look like?
So there's a few different ways you can contact us over the phone. You can come in the branch. We can do it online. Alaska.com has a generic application. Typically, if you were to call into the branch or to me, I would introduce myself, get your email, and send you my personal link so you can apply online. Typically, we ask for some documentation. We'll request some income documentation, some bank statements, things like that I previous stated. And once we review everything and discuss over the phone the next steps, I'll issue your pre-qualification letter and you're officially pre-qualified.
Great, thank you. Summer, Sarah mentioned pre-qualification letter. What does it mean to be pre-qualified, and why is that important?
Yes, so a pre-qualification in basic terms is knowing your buying power. I will review that application along with the income and asset documents that Sarah mentioned. We'll look at your credit history. We will discuss down payment requirements, also go over acceptable sources of down payment. That's pretty important when knowing where your funds come from. You'll have a good understanding during the pre-qualification process of what the estimated total cash to close will look like. That's your down payment plus your closing cost. We'll also talk about how much that estimated monthly payment looks like for your buying range, because you could qualify for more of a payment than you want to pay. And so that's something we want to keep you in your comfort zone and get you pre-qualified where you feel best that you want to make that monthly payment every month. First National offers many programs. During the pre-qualification, we will determine what program is best and most benefits your situation. Some of those include, but are not limited to, our conventional financing is with Fannie Mae. We also use HUD financing, which is FHA. USDA has a rural product that we also utilize for customers. We partner with Alaska Housing Finance Corporation. We are an approved lender with them. They offer first-time home buyer reduced rates and special features on some of their products. We also support our military families here in Alaska, both active duty and veterans, by offering the VA home loan product. We also have the HUD 24 product. This is an Alaska Native or a Native American home loan product with a reduced down payment. So lots of things that we'll talk about during that pre-qualification and discover what program is best for you. When we have you pre-qualified, we'll issue that pre-approval letter. And it's also known as a 90% letter. It's a pre-qualification letter in our world, and that shows the seller that you are ready to buy a home, that you've done your due diligence, you've gotten pre-qualified, and are ready to make an offer. Because currently the market's pretty hot, where homes are going pretty quickly. So you want to definitely start your pre-qualification process before you go out and look, so that you're ready when you find that home of your dreams.
Okay, that sounds good. Sounds like that discussion is very important, the communication. So great. Now I'm pre-qualified and I'm ready to buy my dream home. What do I do next? Sarah, could you take that one?
Yeah, like Summer said, that pre-qualification letter is your buying power. And so now it's time to go shopping. And we work with you and your realtor. We can update that pre-qualification letter if maybe that house is a little bit higher, a little bit lower. Just stay in contact with us, and we're ready to make that specific changes for you. That pre-qualification letter is good for about 2 months. You can reach out to us and update that letter if needed. I would suggest don't change your credit situation throughout the buying process. I had a scenario where this gentleman was pre-qualified and he was shopping for homes. Car broke down. He had to purchase a new vehicle, and he went from paying zero with the auto loan to actually paying a payment now. And so his buying power actually changed. And so we had to kind of go back to the drawing board, reevaluate the numbers, and update his pre-qualification letter. So definitely, if you change a credit situation, notify your loan officer, stay in contact with us. If something changes as far as a job, or your financial situation, definitely let us know. And during that pre-qualification time, I would say maybe before as well, you can reach out to us, and we have a home choice class that is free, and it's some good knowledge, some good tidbits in that class that kind of can prepare you as well before you purchase a home. And that is the home choice class through Alaska Housing. And you actually receive some type of a credit when you take that class, when using that program.
Thank you very much. Got it. I do want to take just a moment to step away and remind our audience that we do have the question and answer feature. We've already received a couple of questions, but keep those coming. This is your opportunity to ask Summer and Sarah anything you can think of about that home buying process. So, okay, jumping back into the next question. This is the point that I'm excited for coming up. The sellers accepted my offer. Now what do I do? Summer?
Well, congratulations in order. You're halfway there. Basically, give us a call immediately. We will want a copy of that purchase and sale agreement once it's signed to avoid any delays. That purchase contract is going to show me, your lender, who's paying what to close looks like. It also has some very specific dates included in it that set up specific timelines for important milestones. Contract dates are very important. They can be adjusted with your realtor and talking about that with the seller and the buyer. But most contracts, on average, from the time you sign that contract to the time you have keys in hand, will be initially sending those initial disclosures out to you. You can sign those in person. You can sign them over a lot of that initial paperwork, as you will see a lot of that at the closing table as well. These disclosures are going to include generic paperwork that's going to discuss things about your specific loan product. It's going to have an updated copy of your mortgage application, as well as your loan estimate. The loan estimate, also called an LE, is an estimate that will talk about the estimated monthly payment for that home. We'll calculate property taxes and give an estimate for insurance. The loan estimate also has about how much money you're going to need for the closing of that particular purchase. And keep in mind, it can be updated throughout the process.
Summer, can I jump in there just a moment? You mentioned property taxes and homeowners insurance are included with that monthly payment. What is not included that I should be aware of, such as HOA, condo dues, anything else?
Great question. So your monthly payment to the bank is considered PITI. So a portion of that payment is going to be your principal and interest. On a fixed mortgage, that is your fixed portion of your monthly payment. It will also include an escrow portion of your payment, which will include the property taxes and the insurance. We take that annual amount divided by 12 and include it in your monthly payment so that we can pay those bills for you. Now, if you're purchasing a condo or a home that has homeowners insurance, you will see on the loan estimate those amounts included in your payment, but we will specifically state that you will not make that portion of your payment to the bank. You'll make that to the association or the management company. So we'll go ahead and discuss that when we talk about what your payment to the bank looks like and what other obligated payments are included with that particular home. Great question. Disclosures, we will have the opportunity to talk about an interest rate and when to lock in an interest rate. We'll also talk about the next steps in the process, to include when is the time to order the appraisal. I'll suggest shopping for your homeowner's insurance so that you can get your policy squared away. We'll also request updated documentation. So by the time we get that contract, usually hired, such as pay stubs and bank statements, so we will ask for those to be updated. And we will get in contact with you through our processing team. So our processor will email you and let you know items that are needed. And they will gather those items. We'll work with your realtor to gather items. We'll work with the title company. Your processor will submit that to an underwriter, and the underwriter will issue a conditional approval. At that time, we start working on gathering up all of those items to resubmit that file back for final. And once everything is clear, we have a clear to close, and then we move on to the closing team.
Great. Sarah, what else should I know about closing or closing disclosures or anything else for that part of the process?
Yeah, so Jacob, as Summer mentioned, we moved through the underwriting, you got the appraisal, you got your homeowner's insurance, we're at the closing table. So what that means is we are clear to close. Congratulations. It's not quite done yet, but we issue, our closer picks it up and balances the final numbers to the penny of what you had paid already. Let's say you've already paid for your appraisal. That is on this document. It's a 5-page document. I don't know if I mentioned that. On the first page, it will go over your loan terms, your monthly payment, all the fees. Once they balance it with title, we disclose it electronically. So it would be sent to you, Jacob. You would e-sign it, and then the 3-day clocks begins. And what that is the government gives us 3 days. It's kind of like a cooling off period. It's the right to rescind the loan. You want to make sure that you and your family are prepared for this home, your mortgage payment, everyone's comfortable. We set you up for financial success. And then on that 3rd day, you go to title and you bring your cash to close. So whether it be a cashier's check or a wire, you would bring an unexpired ID, so an ID that's government issued, that's not expired. You bring it to your closing table. You would sign the package. You will see that same closing disclosure that we released you 3 days prior. Make sure all the numbers there's no errors, they're correct. I show up as a loan officer to all my closings. I make sure that the numbers are kosher with what we have already disclosed to you. And then you begin signing the package. In your closing package, you will find your first payment letter. It shows you when and who to pay and your first payment due date. And once you sign, you actually don't get your keys. You actually record the next day. So when I purchased my home, I signed, went to go pick up my keys, and then you can move into your home.
Okay, gotcha. So a common question that we've received quite a bit is, do I need to close in person, or can I close in a home if I'm going to be out of town on the closing date? How would that work?
Jacob, there's a few different ways. You can, in person is always the best. But before, we can always establish, in the beginning stages of the process, we can ask if all parties are going to be present at closing. If they're not, we can do a power of attorney that's subject to the property that you would allow us to just review. So you can do that, or we can do a mobile notary. Sometimes there's jobs get in the way and you can't be in a certain city at a certain time. So the title will issue a mobile notary and meet you actually where you're at.
That makes sense. Thank you. Well, I hope I get to go through this process shortly. Summer, after I own my new home, when should I reach back out to my lender?
Anytime you have any questions at all, whether that be about your monthly payment, if you didn't have that first payment letter and want to confirm where your first payment goes to, we're happy to help answer those questions. In the future, if you have questions on your payment going up and down because of your escrow portion of your payment, we're happy to help clear up that. Or if you change your situation with your escrow, let's say you decide to cancel your insurance with one company and move on to a new company, we'll want that information right away so that we can update that for your monthly payment. We'll also be your lender for life. We hope that we get to be there and be partners with you in your financial future. If you're ever interested in purchasing a second home or an investment property, or if you want to discuss tapping into the equity of your home, be it to do some home improvements or debt consolidation in the future, we're here to help.
Thank you, Summer. I'm actually going to jump in. I know I said we do the questions from the audience at the end, but somebody asked a good question that relates to the continuously talking to your lender after the purchase process. And that is, can you talk us through the refinancing process and how that might impact credit and when it might be a good time to refinance? Because I imagine that could be an ongoing discussion with our lender.
I can take that one, Jacob. So anytime you want to look into the possibility of refinancing, come talk with us. We will take a look at your current interest rate versus what the new rates being offered are. Maybe you won't be interested in refinancing just for an interest rate drop, but maybe for a term drop. If you want to refinance your 30-year mortgage into a 15-year mortgage. There's a lot of reasons to talk to your lender about the benefits of refinancing. And we can definitely go over that at any point in time. Some people will take out a home equity line of credit in the future and then eventually come back to us and say, hey, I'd like to combine these two loans together into a nice fixed interest rate financial situation.
Understood. Thank you. So that covers our overview of the financial journey to home ownership. Now I want to take just a moment, right, and how to take that first step. So I'm going to share my screen here, and then Summer can walk us through.
So this is our website, fnbalaska.com. And this has a multitude of connections to the bank. For mortgage specifically, you'll want to go to the top of the page where it says home loans and click on that link. That will take you to a few different places. We have a mortgage calculator, we have helpful hints, frequently asked questions, but you'll be able to put in a generic application. If you haven't already been speaking with one of us specifically, this is a great place to start. If you'd like to apply with one of us specifically, if you'll hover above the Meet Our Team section, click on that for us, Jacob. And that will take you to not only pictures, but individually, if you click on our pictures, you'll see a bio of a little bit more information about us individually. It shows areas that we work, but we're willing to work all across the state for anyone. So for example, if you click on my picture, and scroll down, you'll actually see a little bit more information about me, my exact location, my contact information, and you'll see right there under my bio, it says apply with Summer today. So if you click on that, you won't have to choose a particular loan officer. It will go straight to me to avoid any delays, and that way and reach out to you. You'll also get an automatic email that allows you to sign back into your application and upload your documents securely. This login here, if you haven't already applied for a mortgage, you'll want to create an account. This is not the same user ID and passwords for online banking. So just a separate portal for your information. But that's basically it, so that you can get an application to us if you're sitting in the comfort of your own home, and we can get that home ownership process started for you.
Thank you very much, Summer. So we received some questions here, and we're going to jump into answering those questions, but I want to encourage anyone, if you have additional questions, please feel free to jump in. We'd love to respond. And if we don't have time to get to them, not a big deal. We'll reach out to you afterwards as well. So Summer, let's start with you on this first one. If you are selling a house, can the value or potential value of the house be considered as a down payment, or does it have to be sold for it to be considered?
That's a really good question, actually more common than you'd think. So it kind of depends on your situation. So I've had some customers where they absolutely need that equity from their home in order to purchase another home. And so in those cases, that pre-qualification letter will say that it is a contingent pre-qualification, meaning your new purchase is contingent on the sale of your previous home. And so as long as you give us a lot of communication, it is possible to get that done. You would record on one, the funds stay at the title company, go right over to the other one, and it's called a simultaneous close. I've got a couple customers, because the market's so hot, they've actually found their down payment elsewhere, be it pull it from a 401k, gifts from family members, to be able to purchase a second home as long as you qualify with both payments, so that way they don't have a contingent pre-approval letter, and as well as it gives them more time in between their transfers. So because somebody wouldn't be purchasing their home automatically, they won't necessarily feel like they've got a tight time limit to be able to move out and move in all at the same time. So we'll go over your individual situation, but it is possible, called a simultaneous close, and it happens all the time.
Thank you. Sarah, this is kind of a two-part question. I was going to read it as is, and then you can answer. How much should a first-time home buyer plan for, roughly, for a down payment and closing cost? Is there a dollar number that should be saved up before looking to take the next step? What about lending post-bankruptcy? What are the terms for that?
So to answer the first question of how much you need for a down payment, it depends on the person and the situation. We do work with several agencies like Home Opportunity Program, NeighborWorks, Cook Inlet Lending. We can layer programs to help with the down payment, and the rate kind of helps as well. It just depends on the person and how much they have. Some people can gift. You don't always need 20% down to come into the loan. So there are different programs out there to help with that down payment, whether it be, 3%, 3.5%, 5% down. So there are options. And your second question, it was something about bankruptcy. Could you repeat that again?
Yes, definitely. What about lending post-bankruptcy? What are the terms for that?
There's a few terms. It depends on what kind of chapter or bankruptcy you have. I believe that it could be anywhere from 2 to 4 years. I definitely would need to see the whole picture, the application, and I would review that and discuss it at that time.
Understood. It sounds like it's getting back to coming in, looking at each individual's unique situation so that we can work through any of these. Summer, I'm going to jump in with a fun question here that we received. What are some myths about buying a home or mortgage lending?
Well, Sarah actually touched on that just a few moments ago. You don't need 20% down. That has been something that people thought all along. I can't buy a home until I've saved a full 20%, and that's not actually the case. And so you can get in with little to no down, depending on the product. You'll also want to have funds for closing cost. And so we'll kind of talk about those different things. The other one that I get a lot is I don't have perfect credit. And you don't need perfect credit. We can discuss that in your pre-qualification appointment. With Alaska Housing, actually, their interest rates are not credit score dependent. So minimum credit score is 640. And everybody with an Alaska Housing product gets the same interest rate, be a 640 credit score or an 840 credit score. So certain programs, if you're doing an investment or a second home, the interest rate can vary based upon your credit score. And so just again, kind of an individual situation, but you don't need perfect credit to make it happen. And so just we will be happy to take a look at your credit review. And like I mentioned in the beginning, sometimes I put my customers on a path to home ownership that's 6 to 12 months out, because maybe they do have some things on their credit that they were unaware of and can be fixed that would increase that score pretty quickly. So come see us, we'll help you out and give you our opinions and our expert advice to help gain knowledge about what it takes to get into a home. But those are the two biggest ones.
I'm going to jump in and give a oddly specific dovetail on that. Say I have a credit score of 560. What would be available to me, or how would you console me based on that credit score?
So currently 560 with First National Bank Alaska cannot get you into a home loan. There's a reason usually that your score is at 560. And credit is not a defined thing. There's no book out there as to why credit scores do what they do. It's really just 20 years of experience of looking at people's credit, having them do certain things and seeing the scores move. It could be as easily as a simple resolution that you have a small limit on your credit card of 500, but your balance is 490. Well, to the bureaus, you're about to max lower at that time, whereas paying that down to 30% or less of the limit actually increases your score quite a bit. So if there's things on there that can be worked with, that's something that we're happy to take a look at to kind of help you get there. Because a credit score is a temporary snapshot in time. And all you have to do is make adjustments. You do want to make sure that you pay any of your credit reporting liabilities on time and not 30 days late. That's the number one rule. And if that happens, you can recover from that. So again, it's a snapshot in time. So if you come to us and we take a look at that snapshot and see your score at that amount, we'll look at your report and your history and help you determine why that score is low and possible ways of improving it.
Awesome. I appreciate that. We have a couple more questions here, so I'm going to keep going, but please continue to add those on as we're answering these. Sarah, I'm going to go to you next and ask, does First National do multifamily home property loans? And what are the qualifications for that?
Jacob, I couldn't hear you. Can you repeat that one more time?
Yes, absolutely. Does First National do multifamily home property loans? What are the qualifications?
Absolutely. So normally we can do like a single family up to a duplex, triplex, and a fourplex. And actually Alaska Housing has multifamily, meaning above 5+. And we do them here at First National.
Thank you. Summer, I am going to go back to you for this next question. How long do I have to work for my employer or in your job field before you can apply to purchase a home?
That's a really good question because, again, it depends. If you're self-employed, we do want to see 2 full years filed tax returns. It's really hard to determine a self-employed customer's income unless we can see the income that's been reported to the IRS on the personal or business tax returns. So that is very specific. When it comes to a W-2 wage job where you're just getting a regular paycheck, we need a 2-year history of employment, but not necessarily 2 years on the same job. For example, if you just got out of schooling to be a nurse and now you just started your nursing career and you are making an hourly wage, but you just started 4 or 5 months ago, technically your unofficial school transcripts for your nursing school is part of your employment history. And so we will accept your unofficial transcript for the file to show over the last 2 years what you've been doing, and we'll be able to use that income even though you're less than 6 months on the job. So it really kind of varies individually. We look to make sure also you don't have a lot of frequent job changes or gaps in between employments that we'll need an explanation for. But other than that, as long as it's a job that is a W-2 wage earning job, once you've been on the job, you can talk with us. I've even had some people that recently switched jobs, no gaps of employment, but they've got a job offer letter for the new job. And it clearly details their employment terms and conditions and pay. And so I've been able to utilize that as long as I get a paycheck from that first job prior to closing. So again, every situation is different, and that's why we're here to help.
Thank you very much, Summer. Sarah, I'm going to go to you for this next question. Are there any other financial assistance programs I may be eligible for or that might benefit me when buying a home?
So as Summer mentioned earlier, we do work with several agencies, like I mentioned, also the NeighborWorks, Cook Inlet Lending, and the Home Opportunity Program. Those are layering of programs with your loan. And yes, we work with them. We have them available. When an application comes in, that's something that Summer and I are looking at. Not only are we looking at the credit, the income, we're looking to see if you're eligible for any type of benefit, whether it's to help with your rate or your down payment.
Thank you very much, Sarah. Summer, I'm going to head back to you. There's a couple more questions here. I am about to inherit a house. Can I get money out to do upgrades to that home?
So that is a possibility. We've seen that before. And actually the guidelines, specifically conventional Fannie Mae guidelines, talk about that. There is a requirement usually to, after you get a home, except for certain situations such as inheriting a home. So that actually is part of the guidelines for a special situation. And so as long as title and all of the estate documents have been cleaned up and everything is in the proper title name, then we can do a cash out refinance on market value. We just have to show in the loan file that it was truly inherited so that we can satisfy that guideline for the investor. If you have a property that has a new mortgage on it and you want to cash out, that mortgage does have to be at least 12 months old. That's a new rule that just came out. But as long as the mortgage on the loan has been seasoned for at least 12 months, there should be no problem cashing out and doing a little remodeling.
Thank you very much. Sarah, I'm going to head back to you. Is there a separate loan type if we own land and would like to build a home versus purchasing a home? Is the qualification process different when buying a home versus building?
Yes, it's very different. However, it still can be streamlined. So we work with our construction loan officers. When you are trying to purchase land, you can do that through those construction loan officers. You would still give me a call. We can talk through your scenario and you can purchase those. There's a different terms and rate with those, but I would refer you over to a loan officer. You can talk that out. And then when it comes to build, when you own that land, you don't have to outright own it, but it can come as part of as the down payment for a new construction loan. And you would still have an application. I would still run through everything just like a normal purchase of an existing home, but you're building it. So you would work with myself and a construction loan officer. So it's kind of two parts, but typically that's a 12-month build. Once normally construction starts earlier in the year and through the summer. And so once we get 60 days from completion, we would pay that off with a long-term takeout, which meaning your 30-year or 15-year mortgage, or we have a 25-year mortgage as well to pay that off. And then you would roll into like a normal mortgage.
Thank you, Sarah. So we've had a couple other questions dealing with credit, and I really encourage, so we already touched on credit and building credit and the communication with our lenders. I really encourage you to reach out to one of our lenders to discuss your personal situation when it comes to your credit situation. And so with that said, I'm going to jump to Summer for one more question here. What if there is a cash offer, no financing required? Does First National have any services that might assist with the rest of the home buying process?
So if you don't need a mortgage because you have enough cash to purchase the home, you'll work with your realtor to show the seller that you have cash available when you make that offer. You won't need the mortgage department of First National because that realtor is actually going to work with the title company. So that part is still involved. Usually an appraisal is optional at that point because it's not a lender requirement. But if you don't need a mortgage, the mortgage department isn't in play at that point. And so you'll close at a title company, you'll record the next day, just like you do with a mortgage, but instead of the mortgage funding the property with your down payment, the buyer will bring cash to that closing appointment. We do offer escrow services with First National, which is very important for those homes that maybe can't be financed, but the seller has the ability to carry back the financing. So basically, if you don't have cash, but the seller is willing to do what they call seller financed, First National has a escrow department that can assist with that, so that we can be the third-party, non-biased payment collector to make sure that that process happens appropriately. You close, titles transferred hands, you just pay us, and then we pay that seller their monthly payment until your terms and conditions that are set separately by you and the seller have been fulfilled. But when it comes to a cash sale, usually we're out of the picture.
Can I chime in on that?
Yes, please.
So we do offer to recoup. So if you are paying cash for a property, and let's just say down the line you want to recoup your cash and get that out for some reason, we can also roll it into a refinance where you can kind of recoup your cash as well.
Thank you, Sarah, for jumping in on that. I'm going to go back to Summer for this one, a little bit of a niche question, but does First National finance tiny homes or tiny house loans?
That is a good question because we're hearing that a lot more ourselves. So conventional financing, First National, none of us have currently a minimum square footage requirement. The requirement for financing at this point is to have one full bedroom. So that bedroom does have to have an egress window, egress meaning you can escape in case of a fire. It does need to have a fully functioning closet. So some tiny homes would qualify as long as they meet that criteria. Of course, they also have to be on a permanent foundation. But if it is a loft style bedroom or no bedroom at all, because it is like a studio style tiny home, unfortunately, right now we don't have any mortgage products for that, for particular financing. So hopefully more to come on that as it is getting more popular, but they do have to have one bedroom in order for us to put any financing into it for marketability purposes.
Thank you, Summer. Appreciate that. So we're just wrapping up here. I'm going to ask Sarah a two-part question here that we received, and then I think we'll let everyone go a little bit early today. So Sarah, starting off, can any First National branch help me, or is there a certain place that I have to go?
Any branch can help you. We have multiple branches statewide. I work heavily with Summer and Eagle River, Barb and Wasilla, Betsy and Kenai, Sarah and Homer. So I have really, depending on the relationship, you know, if they're in Wasilla, I know everyone there. I say, pop in, Barb can help you. So they can walk into a branch and ask for a mortgage lender. We may not be physically there, but we will get your contact information. We'll introduce ourselves. We can set up an appointment. Typically, we're kind of, if they need me to be in Wasilla, I'll drive out. So any First National branch, you can get a hold of a mortgage lender.
Thank you. And finally, why should I use First National for my mortgage loan? Sarah?
Because Summer and I have been doing this for 100 years. Just kidding. First National just celebrated their centennial year last year. So we have been around for 100 years. We've tried and true. We've proven our financial strength and stability in the market. We are local, like we have been saying this whole time. We're statewide. Our originating, our processing, our underwriting, our closers are all here in Alaska. So we don't have that time zone there. We're here to help you. We are on an approved lender list through Alaska Housing. They offer great programs like we discussed, the first time home buyer program and other down payment assistance programs as well. We work closely with multiple agencies that provide that down payment assistance that maybe other companies may not. And last but not least, our customer service, I believe, is second to none. We believe in Alaska and its community. We give back, we invest in it. We have strong relationships throughout the state. Like I say, if I have a couple I'm helping purchase a home in Kenai and I can't really get to them, I know that Betsy's going to take care of them out there. We have different locations and loan officers in those locations to help. And hopefully we wowed you in that process, that you can refer, you know, your friends and family, your children, to set you up, you know, for financial success. And we prepared you enough that those referrals, that they can purchase a home too with us, and they would trust us as well.
Thank you very much, Sarah. I think that's a great question to finish. Thank you so much to Sarah and Summer for taking time out of their day to come present this information. I thought it was an amazing discussion. We got nearly 20 questions, and I very much appreciate the dialogue that we were able to build throughout this. If you do have any questions that I missed or we weren't able to fully answer, I encourage you to reach out to any of our mortgage lenders, and you can stop in at any branch, as we discussed, and we'll be able to get you the answers to those questions. So I am going to close out here by letting you know within probably the next 24 hours or so at the URL on your screen right now, fnbalaska.com/webinar. We also have previous webinars on that page, and you can register for any upcoming webinars that we have as well. I want to thank you for the participation and for all of our audience members who joined us today, and we look forward to seeing you at the next webinar. Summer, Sarah, thank you again. Bye, everybody.
Thank you, Jacob. Thank you.
Thank you.